Markets Now is brought to you by Durastak Trait Technology, the latest innovation from Syngenta. Available for the 2027 season, Durastak technology features 3 powerful modes of action to outsmart, outmaneuver, and outmatch corn rootworms every move.
And welcome to Markets Now. I'm Michelle Rourke with Jim McCormick of agmarket.net. Well, on a Thursday morning, livestock futures mostly lower, the grains to the plus side. And Jim, we had a gap higher opening in the soybeans overnight on talk that maybe China and the U.S. are going to extend this trade truce another year, right?
No doubt about it, Michelle. You just hit the bullet point of what is driving this market. You know, obviously we had a trade negotiation, the ceasefire here this fall. The bean market responded very bullishly. We've pulled back. And then the last couple of days, there has been talk that President Trump has encouraged the Chinese to buy an additional 8 million metric tons of beans. That's on top of the 12 they've already bought that we believe. The market started rallying on that news. And then with news last night sounding like that may be part of an agreement of President Trump doing, the Chinese buying beans in response, maybe President Trump lowering some tariffs when they come and have this deal signed by the time President Trump goes to China at the beginning of April. So good news for the American producer that more demand from the Chinese.
Okay, so the key here on the tariffs, Jim, is we want to get the 10% tariffs, maybe the 13% tariffs on U.S. soybeans dropped so we get some private crushers in here. What's the likelihood of that?
That could be, it's hard telling. It's just going to be all part of the negotiation tactic, Michelle. I mean, the reality is this is a political buy. President Trump put tariffs on because he was trying to essentially change China's business practices. The Chinese have pushed back. They pushed back by not buying beans. They pushed back by putting the tariffs on. Now we are going to get a second round of political buy. And what I mean by that, economically, it makes zero sense for China to buy our beans. They can buy beans from the Brazilians much cheaper. But they view this deal that if President Trump wants them to buy beans to essentially, let's be honest, support his base, the American farmer, he's going to give them something in return. That would help a lot. If they would drop that tariff, that 10% tariff, Michelle, that'd be very good because right now the buying being done by Chinese is the government, and that's it. If you could get the price more competitive with the Chinese crusher, that would probably just mean more demand for our producers.
So Minister Liu from the Chinese embassy was a top producer on a panel I did yesterday and told me that they would like to drop the 10% tariff on U.S. soybeans. It's all about the U.S. having to drop the fentanyl tariff first, right?
That's what I understand. And, I'm guessing that's going to happen, Michelle. The reality is both these gentlemen are facing a lot of political headwinds right now. President Trump's approval ratings aren't that good. You got the midterms coming up very, very fast. So he's trying to solidify that. On the other hand, what's going on with Xi, if you've been paying attention, they've had a lot of upheaval in their Communist Party. They've had a lot of upheaval in their military. So both these gentlemen have a reason to cut a deal for both countries to lower the temperature, lower the tariffs, and get trade going.
So Minister Liu from China also confirmed basically that they are going to buy the 8 million metric tons, that it is about political buying, as you just pointed out here ahead of this meeting. How important is the timing of that in terms of when they buy that?
Well, I think it definitely has an impact because, when they buy it, when they deliver it, if it's toward the end of the marketing season, it gets delivered more toward the end of the marketing season, that probably isn't going to have near the impact that the market's thinking. The way we're trading right now, the way we're pushing to new highs as we speak for the move, the market is anticipating these beans are going to be delivered nowadays. Now, the one thing we need to be careful, Michelle, it's very, very bullish to see this, but what we're doing is we're driving the prices up, in essence, trying to run the prices up on the Chinese, knowing that this is a political buy. What we're doing is potentially forcing other buyers that normally would buy our product away from our market and buy it from the Brazilians. Export sales, I believe, this week were some of the worst we've seen. So you're seeing the traditional buyers, maybe from the U.S., shifting their buying habits to the cheaper Brazil beans at the moment.
It's a good point you make because weekly exports were a marketing year low this morning at 10.4 million bushels. So great point that you make. The reason I'm talking about the timing is that just because they said they're going to buy that extra 8 million metric tons in this marketing year, they could do it after they've done all of this buying from Brazil after their season, right?
Exactly. And then, the hard part about this, Michelle, is we really don't know what exactly they truly agree to. The fact of the matter is the deal that was caught back late October, November last year, there was no official document released, as far as I know, that said this is what the Chinese have committed to and this is what they're going to do. So we'll see if we can get a little bit more clarity on what exactly they have committed to. But yeah, the timing of it's going to have a huge impact. Like I said, the market's acting like these beans are going to be delivered now, and it's going to tighten that balance sheet dramatically real quick. But if they don't buy the beans till late summer, maybe late early fall, it does change the dynamic of the balance sheet. If we happen to plant a lot of bean acres and we end up having good yields, prices more likely will go lower, simply because we'll have the supply and excess supply to sell to the Chinese above and beyond that 8 million they potentially are going to buy.
Yeah, absolutely. And I have heard that processors are kind of scrambling right now as well, trying to get some inventory in front of them here on this potential run up. You mentioned March soybeans getting above resistance here now, near-term resistance. How much higher do we project? Do we go back up to the November highs now or not?
I think they could. I mean, if they do buy it, you're going to tighten. If it depends, like you said, on how quick they buy them. But potentially, you could push these beans back up toward those, the near-term highs, simply because of the emotion of. Remember, it was an interesting rally, Michelle, when they rallied up over $1 here in the first get-go, and it was kind of amazing in the fact that China committed to buy 12 million metric tons of beans, half of the anticipated buys that we thought, and they put $1 on it, only to pull back. Now only to rally back up, saying they're going to buy another 8, which should get them back to 20, which is still shy of what we thought they were going to buy earlier in the year. So it's going to be interesting to see how far they can carry it. The one thing I'm going to note different this time around, Michelle, than the last time around is we know what the funds are doing. When they did this first run up in the fall, remember, we're in the midst of the government shutdown or coming out of it, and the CFTC was way behind in releasing the data. So when we put that high in right before Thanksgiving, the funds are carrying their second largest bean position ever. And the trading industry had no clue what was going on because of the lack of the CFTC reports being up to date. We now know what's going on, and we'll get a better picture here on Friday of how aggressive the funds are buying into this news story. And that will give us a little bit better clarity, hopefully, in trying to call the top.
Yeah, I'm glad that you brought that up as well, because and then we get these big overnight sessions. You got to feel like maybe China's in there buying the futures in the overnight trade or not.
I think there's a real probability of it. I mean, a lot of people believe when the deal was done in the fall and the market responded to it, the Chinese had already front ran that information and they bought into it, knowing what their government was going to say. I got to believe that storyline is here again today in the last couple of days. I think what is being announced and what the gentleman announced at your conference yesterday, I got to believe the traders and the government knew what was going on, so they're positioned for this move, and they're taking advantage of it.
All right, absolutely. One more question about the soybean complex, and then we'll move on. We got soybean oil up into contract highs here this week on the push from 45Z, but also that India was maybe going to buy soybean oil as part of this framework discussion. We've kind of walked that back a little bit now, though, haven't we?
We have. I mean, the reality is India was always going to be a very tough portion of the negotiation. The fact of the matter is, I believe Modi's support is from the rural part of India, and the rural part of India is not really thrilled about their agriculture producers are not really thrilled about their country importing our products into their country, just like the American farmers not really thrilled about how we're bringing used cooking oil into the United States to get some of those, tax credits here last year. So, it's a political hurdle they're going to have to do, where we're going to come out here. We're going to get these RVO standards hopefully sooner than later. And that'll be the big determining factor, I think, of bean oil over the near term.
I couldn't agree more. Okay, corn market. It's up this morning. Is it following soybeans or wheat or what?
I think it's a little bit of coattail rallying. It's definitely following the wheat, definitely following the beans. If there's probably the biggest problem out there is the corn market, I see. Bean market rallied 50 cents last week on this initial talk of China buying more beans. And it got a 2-cent rally last week in the corn. We had what was construed as a bullish crop report earlier in the week. Yeah. Remember, Michelle, they lowered ending stocks by 100 million due to the fact they raised exports 100 million. That was one of the biggest revisions, that we've seen in the month of February, that the trade essentially missed. And what did we get out of it that day? We got an unchanged market. So the corn market right now, I think, is feeling the overhead resistance of the producer. we know the producer's been relatively aggressive selling the beans recently on these rallies. They've been holding very tight on the corn. Now the question, Michelle, goes into the next 2 weeks as we get into first notice day here at the end of the month. How many bushels of corn are going to get forced to the market? A, the producer needs money to plant this year's crop. B, a lot of them have done basis contracts as well as HTAs, as well as deferred pricing. Do they want to pay to do that roll and pay that cost to roll that position out further out? Or are they just going to say, I need to take the money and I'm going to market the grain here in the next 2 weeks? And that seems to be a little bit of a cap. And that's the reason why we're getting a little bit of, tailwind push with the corn, but not the move that everyone's hoping for at the moment.
Yeah, we did have very good exports this morning, though. 81.5 million bushels over 2 million metric tons. That's huge, isn't it?
There's no doubt about it. I mean, the export is the bright spot in the corn market. But, I know a lot of people are like, well, why are we not rallying on these strong exports as much as we think? The problem is the feed and residual number. I think most in the industry are very concerned that number is massively overstated. It's something like 734 million bushels higher, that category higher year on year. And just statistically, it doesn't seem possible we're going to feed that much more corn to the same amount of livestock. So eventually the government's going to probably have to lower that feed and residual number down. And what it's probably unfortunately going to do, Michelle, is it's going to offset these good exports. The other thing we got to keep an eye on these exports right now, the talk of the China-U.S. trade agreement being extended is definitely the headline everyone's talking about. But there's other storylines out there talking about President Trump pulling out of the USMCA agreement that he essentially wrote back when he was the first round as a president, and he's talking about getting out of that. I'm not sure what that does, but some of our biggest trading partners are Canada and Mexico. So we might make a step forward on the Chinese trade agreement. We might be taking a step back depending on how if he does pull us out of that USMCA. We'll see.
Yeah, corn market right now. Mexico is our largest export customer, so you've said a lot. Also talk about E15 hopes this morning, around E15 hopes maybe being passed. The offset would be that maybe we have to eat some of these volumes from the small refinery exemptions. That's not very positive, is it?
That's it. It's, what you said, I couldn't say it better. I mean, it's going to offset it. The other thing, I know E15 is very popular. I think it's good. I think it'll be very good for American agriculture. I think we need to go that route, but we also got to be realistic. This E15 is not a mandate. It is just the allowing them to sell it year round. And the reality is, excuse me. And the reality is, it's going to be a big expense for some of these gas stations to put E15 into their pumps. And the question is, are they going to be willing to put that expense in? Because most of the money made from a gas station is not the gas they sell. It is a convenience store goods that you buy when you go fill up. So, that's going to be the real determining factor, how quick we can spin up the demand for year-round E15.
Gotcha. Wheat market is up today. It was up yesterday. Is that short covering, or is there any concern about winter kill?
I think there's definitely a little bit of winter kill, a little bit of short covering, a little bit of following of the beans in general. Winter kill is a concern. We have it all the time this time of year, and we'll see how it is as we come out of the rest of the winter. I know right here in northern Chicago, it feels like we finally have broken winter's back. The temperatures are going to moderate and be above normal for the next 10 days, it looks like.
And it's been very cold in Russia, too. That might be part of it or not?
That might be part of it. I mean, if you look at it right now as a whole in the world numbers, it's kind of interesting. The world wheat supply is overall cumbersome, I would argue, but the world corn supply is, some of the tightest we've seen in 10 years. So, the world market is traded. We do need to keep an eye on what's going on in the Ukraine. It's not getting a whole lot of headlines right now because of what's going on. But, we'll see how that impacts because, everyone's hoping that we can get a ceasefire with Russia and the Ukrainians. But right now, it seems like we're further away from that than ever.
And Jim, cattle got a nice push yesterday with the jobs report. But why can we not take out last week's highs?
Right now, it's a situation of, we'll see if we can get the cash to go up. I think, part of the reason you've got with the cattle market is February tends to not be a very good demand month for cattle. And I think the market's a little bit skeptical. Like I said, we got a good jobs number yesterday. We got a big inflation number tomorrow. We'll see how the market reacts to that. I mean, I'm very cautious about the cattle market. The old axiom is you get 2 chances to sell the cattle market. I feel this could be the second chance. I think, the market speculators, Michelle, are also a little bit leery about the screwworm. I know I am. When the United States essentially came out and admitted that they are spraying, they're spraying the sterile flies in Texas. That tells me they're very worried that this is going to show up in Texas sooner than later. And I wonder what that does when it does show up in Texas. Is that going to be the reasoning or excuse to open the border back up potentially? Something we need to keep an eye on.
Okay, thanks so much. That is Jim McCormick of agmarket.net and Markets Now.
With corn rootworm costing farmers up to $1 billion a year, you need the right strategy. Introducing Durastak trait technology, featuring 3 powerful modes of action to strike corn rootworm at full force, outsmart, outmaneuver, and outmatch their every move with the industry's first triple BT protein stack built for corn rootworm control. Take back your yield potential. Make your move at durastak.com. Available for the 2027 season.